Yes, I start.
Should I start?
Murtuza bhai,
Yes,
over
sir.
to you.
Yes.
Kamlesh bhai.
Yeah, yes, sir.
Yes, Murtuza
Shall
bhai
I
आ गए
start?
ना?
हाँ, आगे. Arpit is
Murtuza
there.
bhai
Drushti
is
is
going to
there.
open.
Yes, sir. Please.
Murtuza bhai, over to you.
Yes, okay. So are we ready to start the session?
Yes, sir. Please. 300 attendance is there.
Okay. So let me welcome everyone to this third lecture on the bank audit series. And I recognize the presence of Regional Council member Drushti Desai on the webinar. Then Regional Council member Hitesh Pomal. He is also the Vikasa chairman for WRC and also the banking committee chairman. And Hitesh Bhai has organized this whole series on bank audit seminar webinar. Let me also recognize presence of Arpit Kabra, Regional Council member, and may I request Arpit to give his opening remarks. Arpit, over to you, please.
Hello, good afternoon, everyone.
Good
First of all, welcome all of you to this exciting and interesting series on bank audits. Thanks to Hitesh Bhai, and he's organized one of the finest speakers and one of the finest topics in these recent times. Thank you, Murtuza Bhai. Thank you, Drushti Madam, and thank you, Anand Bhai, Treasurer WRC. Friends, I hope all of you are safe and all of you are sound, and this can be the best time for all of us to, as we always talk about, unlearning, relearning, and then again learning. So these are the times where we could academically fortify ourselves in terms of, since bank audits are the next thing to come up for all of us, so we can all armor with these lockdown. There'll be a huge amount of NPAs that would come up, but there will be a very thin line that would segregate what could be a fraud and what could not be a fraud. In these times to come, I think we'll have a very, very major role to play. And one of the biggest opportunity that would come in is, once there'll be a lot of restructuring opportunities in various accounts at banks, there'll be a lot of forensic audits which are mandatory for every restructuring. So I think, given this, it is in the interest of the entire fraternity to gear up for identifying the so-called frauds. And let me tell you, the fraud as such has not been defined in a particular act, or there is no such just like an income tax act, we don't have an act wherein we can rely on. We have to draw interpretations from maybe the Companies Act, maybe the PMLA, maybe the RBI circulars, notification, all of these things. And today we have no one else but Abhijit Sansgiri sir, who's the central statutory, or who's been the central statutory auditor and would know the banking very closely. So I think all in all, this would be an exciting session today. We'll be discussing about frauds that have happened and the pattern in which auditors can really identify whether these are frauds or not. One another thing I would like to take this opportunity to share with all of you that very soon WRC is also starting webinars for students, the article trainees in your offices. I would urge all the members who are attending today. Once these notifications will be out, we'll be sharing with the members also. Please make sure that the article trainees in your office and your office employees, they do make sure to attend these webinars, because it's in kind a learning for them, it's in kind a training for them, which otherwise would have happened in office, but now since they're not, so they would get it from this. We would keep these sessions during these times only at 2 to 3:30. So I'll request all of you to please make sure that every articles trainee in your office, since he or she is at home, they make sure that they attend this seminar and get the best out of it. Again, congratulating all of you and the WRC for organizing these webinars. Have a great time and happy learning. Murtuza bhai,
Thank you, Arpit. So let me now request CA Kamlesh Kothari to introduce today's learned speaker, CA Abhijit Sanjgiri. Kamlesh bhai, if you can introduce the
Yeah.
speaker.
Yes. Thank you, Secretary Murtuza sir and Arpit for your nice words. It's my pleasure and to introduce us today's speaker, C. Abhijit Sanjgiri, who will dealt on the frauds in the banks on today's webinar. C. Abhijit Sanjgiri is a chartered accountant and he is also law graduate with over 30 years of the post qualification experience. Abhijit Sanjgiri is also speaking at the WRC seminars for more than 20 years. Sir has also contributed on the guidance note of the audit of the banks for the last 5 years with the ICAI. He's also been associated with over 50 banks in the various capacities as a chartered accountant. And he has also been written on the various materials on the fraud on the ICAI. Beside being, he's also a faculty in the certificate course conducted by the ICAI on the FAFP. Abhijit Sanjgiri is also write on the blogs on the risk and controls on the LinkedIn under #risk. With this, I request CA Abhijit Sanjgiri to delve with today's topic on the frauds in the banks, and I welcome all the participants and all the regional council members. It's over to Abhijit Sanjgiri.
Thank you, Kamlesh bhai. Before Abhijit ji starts his presentation, may I request to run the small video on ethics, please?
Yes, sir. Sorry.
Abhijit
सर
ji,
आपका
over to
पीपीटी
you.
शेयर करिए.
Yeah. Thank you.
Abhijit,
I
sir,
would
there are
like to.
545 participants.
Oh, great. So, firstly, I would like to thank the Western India Regional Council for giving me an opportunity to address the participants. Thanks to all the council members for being there and showing support. The topic which has been given to me for today is frauds. Very interesting topic. So I think the number is because of basically the topic. Fraud is a highly misunderstood word. I think at the outset, what I would like to say is one needs to know actually what fraud is, because unless one doesn't know what fraud is, an activity which would have happened, which ideally would have been a fraud, if you see the clear definition of the act, would otherwise, because of the fact that we really don't understand frauds, we would not know that it is a fraud, and because of our ignorance, we may also not take the necessary steps as is our duty or responsibility to maybe report or classify it as a fraud. So let's look first at the various acts which define fraud. So let's try to understand frauds basically from a legal perspective. What's the definition? Then when we move on to banks, let's look at what RBI has talked of frauds. That there are various circulars which talks of fraud. So let's look at various circulars which talk of fraud, and then let's look at what actually cause fraud. So what are the causes of frauds and what needs to be done to prevent frauds. Now, the challenge before an auditor, be it a statutory auditor even of a company, or be it the central statutory auditor of a bank or a branch statutory auditor, especially the branch statutory auditor, he has very less time at his disposal to complete a bank branch audit. In this year, I really don't know how much time he would really get to complete the audit. So in the constraints of time, to find out a fraud is quite a difficult and a challenging task. The key is to look at all systems, all processes, because fraud is actually happening when a weakness is there in a system, which is an opportunity for the fraudster to actually commit the fraud. So let's look at what we could do to find out those weaknesses in processes. Let us officially bring that out in our long form audit report or wherever the case may be appropriately. So once we have brought out the weaknesses in the system, I think, and if there are basically no anti-fraud controls or there is no fraud monitoring happening in a very formal manner, even if let's say a fraud were to happen actually or would have happened, because of the paucity of time what you
Hello.
had, I really don't think it would look like you
Hello.
did a job which was negligent and
अभी
not proper. Yeah.
सर आपका पीपीटी नहीं दिख रहा है सर, पीपीटी नहीं दिख रहा है. So
Yeah,
करिए
I'll
PPT.
start the PPT. I'll start. I have not started the PPT yet, so I'll get the PPT on when I actually come on the PPT. So one needs to understand what sorts of representation one needs to take from the management and what sort of communication or reporting he needs to make. So the key is at the end, let's look at what representation we should ask for and how we should basically put forth our views in the LFAR or maybe in the main audit report or in the certifications which we are giving, as the case may be. So let's cover this comprehensively. I'll speak on this for maybe about an hour or plus. Any questions I would take at the end. So if somebody can just take up all the questions one by one, maybe whatever time it takes, I'll try to answer it in the best possible manner I could. So first, let's start with understanding what frauds are. So fraud is defined by section 447(1) of the Companies Act. Now, what section 447(1) of the Companies Act says is, fraud refers to any act of an omission or a concealment. So it's an act of omission or concealment of any facts. Fraud is also abuse of position. Now, if you look at abuse of position, there could be various cases which come under fraud because a position could be abused quite literally. So frauds in the Companies Act means also abuse of position. Anything which is done with connivance is a fraud. Anything which is done to deceive or gain an undue advantage is a fraud. But it's done, it should be injurious to the interest, instead interest of either the company, the shareholders, or the creditors, or there is a term used, others. So it's a very broad context. So others who mean any stakeholder or anyone who's actually been aggrieved or has suffered a loss or a damage. Now, one more thing is whether a wrongful loss has been caused or not. Now, that means that even an attempted fraud, even though there is no cause of a loss, but even if there is an action of an omission or a concealment, let's assume it's detected, it's not caused actually any wrongful loss, it still becomes a fraud. So it's a very, very broad terminology. If you literally take the definition in front of you and try to find out cases, and if you don't take the materiality factor into account, there could be many cases which would fall under fraud. So let's look at this from a definition perspective when we maybe do or conduct our audits in future. The next section which talks of fraud is section 143.12. It talks of reporting of fraud. The reporting has to be done within the manner and timelines which have been prescribed. There are certain thresholds prescribed. If the fraud is over the threshold, it has to be reported to the central government. If it's below that threshold, it definitely has to be reported then to the audit committee. Irrespective, a disclosure has to be made in the board report. And if you don't comply with this, it's considered a penal provision, and there might be a penalty of about 1 to 25 lakhs, which could be levied for non-compliance. Now, any other responsibility of the auditor to maintain confidentiality is not affected in any manner if the reporting of fraud has been done in good faith. So section 143.12 of the Companies Act also talks of duties of the auditor in respect to frauds. Now we have one more section very relevant of the Contract Act which talks of fraud. Now when we look at the contract, everything technically becomes a contract. So if you are doing an audit, it's a contract between the auditor and the auditee. So technically section 17 of the Contract Act, the definition of fraud would also apply, and we need to know what that is. Now, as per that definition, fraud includes certain acts. Now, what are those acts? One is the act of suggestion of a fact, which is not true. It's made by one who does not believe it to be true. So if I am making a fact which is not true, and I believe that it's not true, but I still make that statement, so it's something which is suggested or it's made, which is not true, is a fraud. Concealment of facts are frauds. Now, concealment of facts being fraud, technically there could be numerous cases where in the course of a relationship between, let's say, a borrower and even the banker, the borrower would not disclose any case. Now, this was something which he knew was true, but he has not disclosed, and technically that is affecting the decision of the bank. Now, if it's done with an intent to get the facilities which he would have otherwise not gone, so any concealment of facts is a fraud. Now that's broad. So ideally you would find in audits you get a lot of information which subsequently turns out to be something different. Now, whether that's fraud, if you strictly apply the contours of a Contract Act, that would be a fraud. Promise made with no intent to perform. So technically somebody who's borrowed money and there is no intention to repay the money, and he willfully and merrily defaults on that. So willful defaulters also fall under this category in the Contract Act. Also, any promise made with no intent to perform is a fraud. Any act which is fitted to deceive. So deception is one of the key ingredients of fraud. It's also there in the Companies Act. It's also there in the Contract Act. And again, fraud is an act of commission or omission, which any of the laws specifically consider as fraudulent. So if it's a fraud as per any specific act, So let's say there is a fraud which could be defined by maybe any of the regulators. Say RBI would constitute a particular act as fraud. The SEBI would constitute certain acts as fraud. The IDA would contribute certain acts as fraud. The PMLA may define fraud in a particular manner. Your IPC has certain sections which though not directly referring to a fraud, refer to fraud in an indirect way. So all of these sections, in any of these legal provisions, if it's a fraud, then it's a fraud. So the Contract Act also has very broad definitions of fraud. I think concealment of facts is one of the broadest definition, and that would hit ideally a lot of spheres in which we as auditors would be conducting our duty. So I think every time when we think of whether an activity is a fraud or not, just look at this point and be very clear what our direction of thinking or reporting or the skepticism which we should exercise should be. Now, we have SA 240, which talks of auditors' responsibility in relation to fraud. Now, in our auditor's report, we have to specifically state that we have conducted our audit in accordance with the standards of auditing. And these standards of auditing say that if there is any deviation with the standard of auditing, we have to report that. And any non-compliance with the standards of auditing would be considered as something which could be fit for a disciplinary action. In case any peer reviewer also finds gaps in our performance of audits in accordance with the SA, I think we may have an issue. So compliance with the SAs is a mandatory part. Now, SA 240 clearly talks of what we should do, what's our responsibility. So before conducting any audit, especially in a bank audit, I think it's very necessary to look at what SA 240 says. Now, what SA 240 says is our responsibility is basically to identify and assess the risk of material misstatement in any financial statement. SA 240 defines what a material misstatement is. Now, what it requires us to do is obtain appropriate evidence on the risks we have identified. So we need to basically identify risks. SA 315 talks of how do you identify risks. SA 330 talks of our response to assess risk. So fraud is a risk. So a risk is something which can go wrong. A risk is something which is a function of probability and impact. So there is a percentage or a chance, it's uncertain that something could go wrong. And what is the likely impact which is going to be caused as a result of the activity having gone wrong would be the impact, and that's the loss or that's the damage which we bear. So a fraud risk identification is one part of the auditor's responsibility, but that responsibility also stems from the fact that it's primarily the responsibility of the management to identify frauds. The auditor's duty is only if there is a fraud which has been identified and whether this has been responded appropriately by the management, or if he has identified any fraud during the course of his audit, whether he's also responded appropriately to maybe the alleged or the suspected fraud, as the case may be. Now, the fraud risk factors which are there, this SA also define what you mean by fraud risk factors. They have to be identified by the management or those charged with governance. So the primary identification of fraud risk factors rests with the management. So your first question in your representation could be is, has the branch identified the fraud risk factors? If on a very realistic, practical consideration, I don't think any branch or any bank would have formally identified fraud risk factors. They would have a fraud risk register which would formally lay down what are the fraud scenarios which would be reviewed and updated regularly. So this is, if you don't have any of the fraud risk factors which are identified, I think that's the first point you could ask for in the representation. If you get a negative answer, that would be the first control gap which you could put in your long form audit report in the appropriate column. Now, what are the types of frauds which would happen? The SA 240 also states what would be the possible types of frauds. They talk of a fraud of a material misstatement, the accounts being materially misstatement, basically a fraudulent financial reporting, an asset misappropriation, or a management override of control. So if there is any control but the management has blatantly overridden the control with collusion, connivance, that's something which is fraud. So auditors are bound to take any such overrides into consideration when they conduct their audit. Now, the essay also talks that ethical behavior, what is expected from the employees, has to be communicated. Now, if you go literally, when we need to comply with this essay, I think we need to ask the management. In this case, if it's a bank branch, we need to ask him what is the communication of ethical behavior which has happened in the branch. We would definitely ask for any advisories, any mails or any correspondence which has been exercised. And if you really don't find any such communication, you could again say that this has not been done. This is a requirement of SA 240 that needs to be done, but it's not done. And our role and responsibility is to document all actions, all correspondences, what we have had with management with reference to the fraud. So anything and everything which we've done in respect of identifying frauds, if we've identified or we suspect there's something, we've corresponded with the management, we've got the management responses, we've taken a stand whether that's to be classified as a fraud or reported as a fraud or not, or whatever are our decisions or whatever are our actions in relation to the entire fraud assessment exercise on our part, we need to document. Documentation is a useful audit evidence tool. So if there's any questions finally on our ability to perform the audit in a reasonable and a fit and proper and a judicious manner, I think the documentation is the one which will come to our rescue. So SA 240 again is a very important document which would cover what would be our roles and responsibilities. So just summing up, one is understand the definition of fraud as is given by section 447(1) of the Companies Act. Section 143 will give you what are our reporting requirements. Section 143(12) of the Companies Act. Section 17 of the Contract Act would also indicate what frauds is. So when we need to identify whether any activity is a fraud or not, we need to be guided by basically these sections. And then SA 240 also talks of a responsibility in connection with fraud assessment. So these three are very important concepts or the law clauses which we need to consider before we go ahead. Now let's understand what are the various theories and why fraud happens, why fraud will happen. Now the most common and the most popular theory is the theory of the fraud triangle. Fraud is a function of opportunity, pressure, and rationalization. Opportunity is where there is maybe weak controls or non-existent controls. So it's for any person, it's an opportunity because there are weak controls to commit an activity and the fact that he can easily carry it out. So if you're keeping your doors open, I think it's an open invitation for any thief to enter and get away with your assets. So opportunity is the first part. Pressure, again, pressure of targets, pressure of delivering consistent numbers, pressure of targets would lead to mis-selling, pressure of having consistent results, reporting quarterly growth, profit figures, quarter on quarter, year on year. Again, it might lead to financial manipulation of our accounts. So pressure again creates a reason why one commits fraud. And then the question is rationalization. If I'm able to rationalize and convince my internal mind that it was right to do so, or at times there could be the fact that the fraudster would also be rationalizing to himself that he may not get caught because, or even if he gets caught, the cost reward ratio is highly skewed in his favor, or because of the tardiness of the law, I think it will take a lot of time before something would really happen to him. So all these are factors which would lead to why a fraud would happen, more likely to happen than not. There is one more theory of a fraud diamond which considers all these three factors plus adds one more factor of the capability of the person who's committing the fraud. So that this theory says that yes, there might be an opportunity, there could be pressure, and there he would be rationalizing, but unless he has the capability or the capacity to actually commit that action, he has the tools and the resources to do it, and also the resources to get it in for a substantial period of time. I don't think that theory says that someone would commit fraud. So this is something which again one needs to know whether who could be capable. So when you set anti-fraud systems, who could basically penetrate your system, especially in terms of IT fraud, who has the capability to carry it out. I think they are designed with the fraudster also in mind. So these theories are useful to understand scenarios where frauds are likely to happen, and then ring fence around those scenarios, so that the thing which is tried to be secure is protected. Now there's a general theory called fraud circle, which says that wherever there is money, there's likely to be a fraud. So that's very generalistic, but yes, a very simple concept. So wherever a money is involved, frauds happen whenever there is money which is involved. So this is one more theory which explains fraud. This another concept very popularly known as an 80-10-10 rule. The 80-10-10 rule says that in a very generalistic manner, there is a 10% of population. So in case of a company, 10% of employees who would be highly ethical, people of integrity and highly upright, who would never commit a fraud. There'll be 10% people who would be so dishonest that they would always be on the lookout for opportunity to commit a fraud, always be using whatever rationalization they can. They may or may not need pressure, because they might think fraud as something which is fun or something which is to be done out of revenge or whatever gives them a thrill or an adrenaline rush. So this is a 10% population for whatever reasons, and there is an 80% population which ethically are people of integrity, but then when put under any situations of pressure or where they see an opportunity and when they are able to rationalize, they might commit a fraud. So the real challenge is in this 80% of the population, which is normally very ethical, but given the, or unfortunately given the right situation or the context, they could commit a fraud. So that's where makes the population who could actually commit a fraud much bigger, and that's why we need to have lots of proactive and automated control actions to be taken to prevent the fraud. Now, fraud requires ideally to be punished in the court of law. What they call is the Latin word mens rea, which means a guilty mind. So unless you're able to prove that the fraud was committed with a guilty mind, the punishment in a court of law practically is slightly difficult. So that's a no direct definition of fraud. So there are other definitions which are criminal breach of property or criminal breach of trust or section 420, which talks of cheating. So there will be various sections under which a person may be penalized under IPC, but fraud is something which is not defined directly, because a guilty mind may only be proved by the facts and circumstances of an individual case, which can't be put in a watertight formula. So there'll be a lot of evidences and cross evidences which would be put forth to prove fraud in a court of law. So that also needs to be borne in mind when you actually accuse somebody of fraud. So it's specifically if it's reference to a particular section and it's put in reference to a particular act, I think one needs to even be very careful when one calls something as a fraud. Now the theories of defense for a fraudster is basically, there's a theory called the oops theory. So oops, it was just a mistake. There was no intention to commit it. So as I said, the fraud depends on the guilty mind. He says that there was no intention on the part to commit a fraud. It was maybe negligence or at times it was an error, a genuine error which happened with no intent to basically commit anything. So that could be the basic defense which somebody would have. Now there are two theories, very popular theories, I would say, or very interesting theories. One is the cockroach theory for frauds. That cockroach theory says that whenever you see a cockroach, the possibility of the cockroach which is seen not being the only cockroach around is very high. So similarly in the case of frauds, if you see one fraud which has happened or one transaction of a fraud which is there, the possibility of there could be a series of similar transactions, or the fact that if the culture is not very moral or a culture of high integrity, and then the chances of frauds being committed become much more. So this theory just tries to say that just If there's one incident, just don't brush it off as a single solitary stray incident. It cannot be inadvertent. I think you need to deep dive further and eliminate further chances of frauds. And the popcorn theory is it's a fraud is very addictive. It basically somebody who's committed a fraud maybe for a lower amount and he's got away with it. Then subsequently the incentives for committing frauds of higher amount increase. So as like a popcorn, you have one bite, you feel like having more. So similar with fraud, if you commit one small fraud, you get away with it. The chances of you committing bigger, higher, more number of frauds will always increase. So just bear this in mind. These basic theories which talk of fraud. Now, what could be the controls which we would have to prevent fraud? So once frauds is a risk, it's something which we can't live with it because the damages which would be caused by frauds are very high. There's a reputational damage also if a fraud is there. So basically the controls are to prevent, detect, and maybe act on it. So you could have an automated, proactive, or a deterrent control which actually prevents a particular incident from happening. So let's say if a case of theft or stealing something or misappropriation of property. So if there are proper access controls, there's a proper control of having a CCTV camera, even having multiple checks and balance. So you have cash which is kept under dual custody, under lock and key. It's kept in a which has an intruder alarm. So there'll be a number of controls which would prevent actually the fraud from happening much better than detective control, because once the fraud has happened and you detect it, unless you don't detect it in a very reasonable point of time, the fraudster could vanish with his money in seconds. So something like a cyber fraud, within a second the money would be unauthorizedly transferred from your account to some other account, and from there it would have been transferred to multiple accounts. So it's just not possible to know where it is. One thing is a deterrent control. So if there is any fraud and you've caught somebody with the fraud, just use the harshest possible punishment, like maybe termination on the spot, and clearly stating that he was dismissed on grounds of fraud. A lot of organizations, if there's any fraudulent activity or especially an ethical misconduct which has been done, they ask the employee to resign. So that's something which from an HR perspective may not be technically correct, because if he resigns for certain reason and then if he's open to join another organization, because if he was terminated on frauds, maybe he will not be absorbed by anybody, but if he's just resigned, then the chances of him getting a job are there, and the chances of him committing frauds in that organization also increase. So some of the deterrent controls or some heavy fines or punishments which serve as a deterrent to somebody else to commit the fraud could be in place. We have some basic controls like a maker checker. I think if somebody wants to commit a fraud or has committed any fraudulent transaction, the checker will always be there to prevent him or catch him. That may not happen if the maker checker both are in collusion and connivance, and they could, or if there are other people also involved who would completely circumvent the controls, then maybe frauds can still take place. But maker checker still is a very basic useful tool. Then you have job rotations, and a lot of times people are rotated to basically ensure that they don't come in one place and they become so safe and secure with this place, and there's a conflict of interest in place. So ideally, in cases of procurement or certain industries where you license with third parties and there are chances that you could be bribed or that you could be corrupted, I think this becomes a very useful tool. Then the a control of mandatory leaves. I think this came into prominence post the PNB scam. The PNB scam was primarily detected because the person who was there and who was committing, basically the focal point of this fraud was had gone on leave. So in his absence, somebody else in his who was there, who was filling up for his absence, basically detected it. So mandatory leaves is again an important control, and RBI specifically issued a circular now on mandatory leaves being made mandatory. So that's one. Physical verification, again, if there is any asset misappropriation, the fact that it will come to light is only when you do a physical verification. So again, quite important. Technically, in the Satyam case, there were non-existent bank balances. So if you would have done a physical verification of the bank premises and of basically confirmed it with the process of reconciliation and confirmation, maybe the fraud could have been detected some days or months or years earlier. So that's again, these are good control processes. Authorization is again a great control process to basically, one is an authorization in terms of an access to a certain software or a certain activity. And authorization could also mean passing a transaction. So somebody has a conflict of interest and abusing his position to basically withdraw money from the company, which is not entitled to getting some personal expenses to be paid. Then somebody who's authorizing it, other than the one who's done the transaction, I think he would not allow. So that's one control. And audits, as we all know, the last line of defense, the third line of defense, an independent assurance tool, which also helps detecting fraud. So all these are basically controls which would be employed by the organization to detect or maybe prevent frauds. The fact that an audit is in place and an audit would find out that fraud also serves as a deterrence to somebody from committing the fraud. Now, what could cause fraud? So if we look at what are the causes of fraud, and if we find any of these causes prevalent in the organization or prevalent in the branch, then obviously we could write straight in our report that these controls or the weaknesses in this control should possibly mean that there could be increase in the incidence of frauds, or it increases the possibilities of a fraud taking place. So you could report appropriately, but let's look at some of those controls or some of those causes. One is a weak control design. So if there is no control in place, or there is a control in place but it is so poorly designed, or there is a control which is designed but it's not implemented at all, or which is not implemented properly. So you have a maker checker as a control, but the checker is just not functioning. The checker has maybe given his password to the maker, and the maker and the checker technically then become the same person. I think when there's a case where there's no maker checker, that's a failure of control design itself. When there is a weak maker checker, in the sense that the checker is actually not doing his duty as required in spirit, I think you have a case of poor control implementation. Then the tone at the top. I think the tone at the top has a lot to do with how the culture is set, how the people at the ground reality do their work. So somebody who's at the top, highly ethical, highly inspiring, I think he sets a very strong and a firm tone at the top that the organization has zero tolerance for any frauds or any cases of maybe sexual harassments. So ethics, your morals, the culture which is set at the top has a very strong connection with prevention of fraud. So in the case of a branch, it's the duty of the branch head to actually set the tone. And I think in our discussions with him, we should ask him is how he's actually set the tone for a zero tolerance. I think if there's no formal commitment either in his actions or in any of his conduct, I think one could still word it appropriately in our audit reports. The absence of management review. Review is a process which is instituted to basically take stock of the situation, find whether it's happening as per plans, if there are any unexpected deviations or divergences or variances. So if there is a complete absence or there is a poor management review which is in place, I think it increases chances of frauds also happening. So no oversight. It's similar to review. If there's no competent oversight, again, no oversight is a design gap. Lack of competent oversight is an implementation gap. Then the training, awareness, sensitization. I think HR has a huge role to play in it. Your line manager has a huge role to play in it. So if there's complete absence of training, anti-fraud training, a culture training, a sensitivity training, an ethical training, how one should respond when there is a case of an ethical dilemma, I think all of it plays a very big role in instituting strong anti-fraud control. Then you have the pressure of targets. any huge target which maybe is unachievable. I think it would lead to employee bending the corners to basically achieve it. So mis-selling in the financial services, especially of insurance products or of mutual funds, is one of the key examples one could give of mis-selling. Again, manipulation of financial statements. Again, could be for various things. One is your bonuses depend on your financial performance. Your share price depends on your financial performance. So your financial performance says a lot of things. So manipulation of financial statements again could happen in various ways. Again, a very big component of frauds in any organization. So one needs to be careful of how it could be done, why it could be done, and what should be done maybe from our part to ensure that it's not happening. We discussed earlier greed, need, fun, revenge. I think greed is the most common cause why frauds happen. So, as said, the quote by Mahatma Gandhi that the universe or the planet has everything for everybody's needs, but not much for somebody's greed. So once if you're greedy, I think there's no limit to something what you get, and somebody who's greedy will always be looking around to cut corners or find ways in which he finds an opportunity. So greed is also one cause of it. Then your poor deterrent action. We discussed this. The tardiness of the legal system, the cases and the courts are going to go on for 20 years, and then it's the fraudster has a lot of things which are going in his favor, because by the time he can just jump the gun, go somewhere, maybe abroad or wherever. I don't think in this times it would be possible to go anywhere, because he'll face trouble anyway. But the legal system, the tardiness of the legal system again is plays a very big part on somebody actually committing the act and rationalizing that he will never get caught. That's the skewed cost benefit ratio in the favor of the fraudster, which enables him to make a decision. So these are some of the causes why frauds happen. Let's look at what should be done by an organization to prevent those frauds, and if those actions are not there, then what we should do in our reporting to report that this is not there. So I think that would be strong recommendations from the audit part to ensure that they're done. The primary is there a formal fraud structure. So a formal fraud structure first starts, the basic is by having something called a fraud policy, whether that fraud policy is in place, whether you have committees for reviewing frauds, whether the decisions of those committees are minuted, they are transferred to everybody, whether you have fraud officers, fraud risk champions in place, whether fraud registers which capture all scenarios of fraud are documented, whether anti-fraud controls are in place, whether the design or the implementation is in place, whether these controls are mapped to the frauds, whether a gap assessment is carried on, and whether if the gap assessment, as we have zero tolerance for frauds, what is the activity or what is the procedure which you are following to ensure that this gap is eliminated or contained as much as possible. So then what are the actions, what are the timelines, and who are the risk owners will also have to be defined. So whether a fraud register is in place, if there is no formal fraud register, again, it's an immediate point which we would report in our LFAR. And whether there's a strong ethics culture which has been set up in the organization, regular fraud reviews, maybe forensic audits, maybe anti-fraud audits, whether there is a system of vigilance or surveillance which is prevalent in the organization. Banks have a vigilance function, but whether vigilance has been playing an active role, especially in maybe the branch under audit. So that's something we need to do. Whether there are any lifestyle audits which are undertaken, so something who is living beyond his means, whether that's reviewed, and maybe any attempts made to find out as to why he's being able to live in such a lavish manner. Then exit interviews also show a lot of cases of friction. I think exit interviews have in many cases the people who have left the organization have turned out to be whistleblowers in a particular way. So exit interviews is something which an organization can do. So if that's not done, you could recommend it as a strong suggestion. Then whether employees who have been found guilty of committing frauds, whether they have been terminated on the spot. If they have not been terminated and they have been asked to resign, as we discussed earlier, again, that could be something which
should be immediately stopped, and maybe factual action should be taken. And again, somewhere very strongly, the tone at the top, we should say that we have a zero tolerance policy for fraud. So that's a general discussion on fraud. So one is we set up something, we are trying to understand the fraud theory, what causes fraud, the fraud triangle, the fraud diamond, the fraud circle, the 80-10-10 theory, the mens rea, the cockroach theory, the popcorn theory, the OOPS theory of defense. Then what are controls which should be undertaken to minimize the frauds, the automated controls, the proactive controls vis-a-vis manual reactive controls, the deterrent controls. Then what are the types of controls you could have, like your reconciliations, your authorizations, your maker checker, job rotations, mandatory leaves. Then what could be the causes of fraud? We've seen multiple causes which cause fraud, so that needs to be plugged. So whether an organization or a branch of the bank has done any cause analysis as to why fraud would happen, and then we talk of what should be done by the organization. So the organization structure, the fraud registers, the fraud policies, the trainings, the awareness, the terminations on the spot, the exit interview. Now let's look specifically at certain circulars which talk about frauds in banks. Now we have 6 circulars which according to me are very important in basically finding out fraud. So one circular is the circular on detecting and impounding of currency notes. So that circular says if more than 5 pieces of counterfeit currencies found, then you need to make an FIR. And then there's the policy of basically making a report. Then there has to be a training to staff on how to detect counterfeit notes. So if you find that the people who are in charge or custody of the cash have not undergone any training in this, then that's again an issue to be reportable. I think that's a simple question which you can ask in your representation. If you get a negative answer, you straight have a very low hanging fruit point to put it in your audit report. Provision of ultraviolet lamps or other infrastructure, need to see whether they are there, whether they are used and they are in a working condition. So that's one basically. This is a circular dated July 1st, 2019. You have another circular on mobile banking transactions on July 1st, 2016. What it talks of unauthorized transactions through hacking your when there is a mobile banking, somebody transferring money by unauthorized means using your mobile as a device, then there could be issues of denial of service, the DOS attacks, as one knows, breach of secrecy, breach of confidentiality, and this circular talks that the branch has to take necessary protective measures, including insurance. So ideally, your representation to the bank is how have they tried to secure the mobile banking transactions? What are the controls? Is there any formal policy? Is there any formal documented manner in which they are controlling those issues? So that's one which the bank needs to see. You have done the heart of basically the fraud circular, which is the master circular on fraud, July 1st, 2016. Now one needs to note that there are different master circulars for a scheduled commercial bank, and there's a different master circular for an urban cooperative bank. The urban cooperative bank circular is 1st July 2015. As of 1st July 2015, there were common points in both the circulars, but there is one point in that cooperative bank circular which I would like to highlight, which is not there in your main commercial bank circular, which applies to all scheduled commercial banks, which means it applies to private banks, the PSU banks, and foreign banks. So this is a point which I'll just take you across. But one is this circular classifies fraud. So it's given about 4 or 5 types of frauds. It talks of maintenance of a central fraud registry. It talks about returns on fraud to be made within a particular time frame. There are fraud monitoring reports, FMR 1, 2, 3. It says that you file flash reports of fraud if the amount involved is more than 5 crores and above. It has to be filed within a week, and there has to be a board reporting quarterly or an annual review by an audit committee. Now, what are the aspects to be considered in a board review is one, whether the system is adequate to detect frauds in the shortest possible manner. Now, this is one question which you can ask at the branch level, is that if a fraud was to happen, what is the process in place to detect frauds in the shortest possible manner. And I don't think there could be any formal documented process which the branch manager would let you know. Or in the course of his discussion, if he is giving you a process, please get that in writing. Please test that control process. If you're finding it that the design is there or the implementation effectiveness is there, it's fine. Otherwise, I believe wherever I have done an audit, this is a low-hanging fruit which I could report in my LFR. Staff accountability, I think there's no formal process as such to detect fraud staff accountability. Yes, because it's a mandatory provision, they make some attempts to find and fix staff accountability. But in a lot of cases, you'll find gaps or weakness in this process. So please check this out. Then it talks of deterrent punishment. Now, what is the punishment which is there? Obviously, yes, termination is what is mentioned in the policy. But whether that's really done, I think one needs to really read that. Then what are the laxity in adherence to the system? What are the process gaps which are there? What needs to be plugged? So in any fraud transaction or any attempted fraud, please look at whether any attempt has been made by the branch to find out what were the gaps in the process which led to the fraud in the first instance, and then what are the steps which are done to prevent that. Then you are reporting to either the police or the CBI, as the case may be. Then you have special committee of the board to review frauds over 1 crore, whether such committees are there, or if there is any fraud over 1 crore which has happened in your branch, whether it has been referred to the special committee and what's the decision of the special committee of the board. Now, precautions to be taken in case of frauds. One is having a UV lamp check for all checks over 2 lakhs and multiple checks for checks over 5 lakhs. Again, I feel for multiple checks over 5 lakhs, this is somewhere where the bank may not be actually doing, because this amount was fixed some time back, and 5 lakhs is as an amount for which you need to do multiple checks. I think it's just not being done. The second is that a lot of checks are not being used. The transfers are being made by RTGS, NEFT. So the controls over that process, maybe the fraud which could happen in the RTGS, NEFT space is what one needs to see. Then your various SMS alerts, whether there is a system of having SMS alerts and whether that's used and by the bank, especially the controls over modification of telephone numbers and email IDs, because a lot of frauds have been committed by people who then change the telephone numbers or the mobile numbers or the email IDs, so that whenever an SMS alert has gone, it has not gone to the actual customer, but somebody who is beneficially controlling him. So this is something one needs to really see, the modifications. Then RBI has stated in a circular dated 7th May 2015 about early warning signals and red flagging of accounts. So what they say is there are these 42 early warning signals which the bank should monitor. Now, if this 42 early warning signals have been noted, then whether these are to be classified into an RFA, then a decision has to be taken within 1 to 6 months of the early warning signal being first noted. Then once the decision has been made as an RFA, then whether you classify that as a fraud or you remove it out of the RFA status has to be done within 6 months. During this status, you can hire forensic auditors, external auditors, or take the help of forensic experts to basically find out whether it's a fraud or not. Any forensic investigation which has been done has to be closed within 3 months. So this is a very important circular. Please read all these 42 early warning signal indicators given by RBI. Please check whether the branch has a formal system to monitor these early warning signals. In a lot of branches, you will not see any formal monitoring. This again is a very low-hanging fruit. You can quickly just through the MRL and some basic testing find out that there's no such formal system, and you could basically give a suggestion for the fact that it has to be found out. Then one is the circular talks of various things which needs to be done during a loan, and the pre-sanction audit, a disbursement audit, the annual review audit, the controls over there. Then you empower the whistleblower. Then there is an incentive for prompt reporting of fraud. You're basically allowed to spread the fraud over 4 years, 4 quarters. If it's not there, then you will have to expend it out immediately. All title documents over 5 crores need a legal audit. And you need to basically report cases of theft, burglary, dacoity, any bank report robberies which are there in a formal quarterly return, and all fraud cases have to be formally closed. So there has to be a formal closure process. and ideally, if there is any fraud which leads to an account write-off, any write-off in amounts needs the sign-off of the statutory auditor, and when one of the and in this certificate, the statutory auditor has to basically even see whether the staff accountability has been affixed and what were the gaps in the systems and processes which led to the fraud, and whether these systems and processes have been made watertight, the gaps have been plugged to ensure that the fraud will not recur again. So that's what the auditor has to basically see. Then you have the fourth A is the Master Circular on KYC, AML, CFT. This is dated 1st July 2015. It talks of beneficial ownership. It talks of money mules. These are basically beneficial owners is nothing but somebody who is controlling the money on behalf of somebody. He's the actual owner, but he's basically put somebody on front to do it. So this circular talks of a KYC policy which should have the customer acceptance, the customer identification procedures stated, how the transactions will be monitored, how the risk will be managed. It talks that no transaction should be done with shell correspondent bank, the recommendations of the FATF, the Financial Action Task Force, if any PMLA rules have to be followed. Freezing of assets under the Unlawful Activities Prevention Act 1967, which has been recently amended on 31st December 2008, that needs to be seen, and the very common which auditors need to check is the filing of suspicious transactions to the FIU. So one is, what is the process in which a bank is generating alerts from the system? So there'll be parameters on the basis of which alerts would be generated. So whether these alerts are being generated, whether the branch is going through each of these alerts and then taking a call whether it's out of the alerts generated, whether there should be a reporting to FIU as an STR or not. So all such transactions which have been thrown up as alerts and which have not been filed as an STR, one needs to have a very watertight documentation. So that's what the auditors need to check. Now, all such cases of STR or maybe CTR, or there is even a non-profit transaction report which needs to be filed. They have deadlines. There is a chief compliance officer who's responsible. There's a compliance officer who's responsible for this. There's a principal officer who's designated who's responsible for this. So whether these have been meticulously followed is what the auditor needs to see, because RBI really has no tolerance for any violations of KYC, AML, or the CFT, and banks have been fined very heftily for non-adherence to these KYC provisions. Then you have the Master Circular on Willful Defaulters. Again, this is dated July 1st, 2015. So banks are required to submit to RBI details of all willful defaulters more than 25 lakhs. Now, is there a process in the bank for identifying willful defaulters? So how does a bank identify a willful defaulter from somebody who's a defaulter? Now, if there is a formal process, it's fine. If there's no formal process, I think in most of the bank, there's no formal process to identify a willful defaulter. So one should seriously look into it and maybe report appropriately. Now, diversion and siphoning of funds are again would be viewed as frauds in a very broad context. So whether there's a diversion or siphoning of funds which is happening, whether end use of funds is actually done properly, you're not blindly relying on a CA certificate. The circular says that preferably the CA should be from the bank's own panel, and the borrower's chartered accountant should not be one who should be certifying end use. So that's their suggestion. Then criminal action again, willful defaulters is recommended. One thing which should be viewed very seriously by us is the disciplinary action against chartered accountants for falsification of accounts. And if they are found guilty, I think it's very clear that they will not be considered for any future engagement. And they're saying that the bank should write to the Reserve Bank or to the institute for taking disciplinary action against the chartered accountants. So that's something which the chartered accountants need to be very conscious of. And what they say is information to be made available to banks or financial institutions on a real-time basis as regards willful defaulters. Now you have the last what we're talking about is the cyber security framework in banks. Now this cyber security framework is a circular dated June 2nd, 2016. It says that your cyber security policy has to be separate from the IT policy. The IT architecture should be conducive to security. there should be a process in place for identification and classification of information assets. So this is something which is a question we can ask in our MRL, whether there is such a policy or a procedure in place where you identify and classify all your information assets. So the information asset register is something we should ask for. Whether cyber security preparedness indicators, they are in place to meet the chances of a cyber fraud occurring, if any. So this talks of a very formal process, formal identifying these indicators. So if they are there, it's good. If they're not there, again, you have one more point to report in your appropriate long form audit report. Whether the bank has a cyber crisis management plan, what is the BCP-DR which is done, whether social media risks are being managed properly. I think this is one, again, a low-hanging fruit where you won't find any major documentation in the bank branch. And what is the policy for IT services outsourcing? Yes, there'll be a policy at the head office. The copy may be there with the branch. If all this outsourcing has been done centrally, it's fine. But if it's done at the branch level, then whether they have adhered to the terms of IT services outsourcing, which is as in concurrence with your main policy. And incident management, monitoring and reporting, whether if it's done at a decentralized branch level, you need to assess that. Gap assessment, again, this has to be done is what is the actual scenarios, what can happen, what are the controls in place, and what are the gaps. Then the cyber security awareness, and what are the trails or the public key infrastructure which is there, and any of the control mechanisms around that. So that's what the cyber security framework in banks tells us to do. So this is something which one needs to see. Now, what I would also speak is some specific controls, cyber security controls, which should be in place. One is to prevent usage of unauthorized software. How would you secure configuration? How would you check patch vulnerability, or how would you be in top of change management? How would you be in control of access control? How would you secure your mail and messaging systems? What is your data leak prevention strategy? How is the advanced real-time threat defense? Are you conducting any VAPT or a red team exercise? Now, if you ask somebody a word of a red team exercise in the branch, maybe half of them may not even have heard this word. Anti-phishing, is that done centrally? Is that done locally? Or if it's done centrally, then maybe whether the branch is aware of something being done, or this is something that you could ask the central statutory auditor or tell him that this part has been informed to us by specific writing in the MRL that it's conducted at the bank level. So we've not verified this in depth. And again, what's the authentication framework in place? So these are things, the cyber security controls. This circular, which is dated 2nd June 2016, specifically tells the banks to do. So that's something which you should look at. Now, one thing which on frauds, which is something which is a very common interest to us, and which the circular on frauds by urban cooperative banks only states that this is a master circular for urban cooperative banks on 1st July 2015, which talks of frauds committed by unscrupulous borrowers. Now, what does this circular say is there are certain acts of discounting of instruments or by kite flying. Now, if that's committed, this fraudulent discounting or kite flying is a specific fraud. Now, this is something which is happening commonplace, but in commercial banks, this is not called a fraud, but in urban cooperative bank, this is called a fraud. Now, this would be quite surprising to a lot of us. Though this is a 2015 circular, wherever I've spoken on this, people have found this quite surprising. One is fraudulent removal of pledged stocks, disposing hypothecated stocks without the bank's knowledge, and inflation of stocks in the stock statement to draw excess bank finance. Now, just read these words. I'm repeating this again. Inflation of stocks in the stock statements to draw excess bank finance. Now, this is something which is very commonly done, and which you will find in almost all the branches where you would be conducting an audit. The chances of it being there is much higher than it not being there. So the cooperative bank master circular very clearly says that inflation of stocks in stock statement to draw excess bank finance is some of the ways in which frauds are committed by unscrupulous borrowers. Now it also talks of something very clearly: diversion of funds, lack of interest or criminal neglect on the part of borrowers or partners in adhering to financial discipline. So there's a financial discipline which is needed to be maintained, like submission of stock statement or submitting of the balance sheet on time. And if the borrower is just not giving it, so there's a neglect. Now it talks of a criminal neglect, but lack of interest is one very broad word. So if a submission of detail is also not given, that would tantamount to a fraud. Then management failure with malified interest leading to the unit becoming sick. That's one. Laxity in effective operation in the borrower account from bank functionaries. So lack of monitoring on borrowers' accounts by bank officials, rendering the advance difficult for recovery and resulting in financial losses to the bank. That's also considered as a fraud. So if there is any account which is weak, which is showing signals of weakness, if the monitoring in such accounts is not happening effectively, if the monitoring is poor, as a result of this poor monitoring, the account has become an NPA and subsequently the bank has to take a haircut, or there is a write-off or a hit to the P&L, then this could also be considered as fraud. So one needs to, that's why I said the definition of fraud is very big. RBI circular even says that if there is a cash shortage more than 5,000 rupees or a particular amount, that's to be considered and reported as a fraud. So just look at the definition of fraud as specifically given in the RBI circular, especially it's not there in the scheduled commercial banks, but it's specifically still kept there in the circular for cooperative banks. So in spirit, just maybe let's take a very skeptical view also of such transactions. Then the practical issues which we face in everyday bank audits, the divergence in NPAs. Now, if the divergence between what we have found out in our audit and what the bank has done, ideally at the broader from the definition of frauds, if we look into, I think divergence also could be very broadly viewed as a fraud. But yes, ideally the banks will use the oops theory now, that this was something out of an error or because they didn't have any intention to actually not show that as an NPA, but they genuinely believed that this was a standard account. So obviously divergence, to call it as a fraud would be difficult, but yes, if you look at the broader definition of the law, NPA divergence again done just to the point of view of reducing the amount of NPAs which would be there in a bank, I think would fit into that category. Then variances of drop over, inflated stock statement, inflated valuations given by valuers, frequent TODs, related party and cash transactions, manipulation in financial statements by tweaking your provision figures, by understating liabilities or getting income upfront, incorrect information which is supplied by the borrowers. I think as per the Contract Act, if this would be a fraud, then padded estimates of basically future revenues again would come under this category. Conflict of interest situations would come under this, and you will have situations of frauds which would be done by unscrupulous borrowers, which would need to be seen. So this is something where one needs to clearly look and have a. So I'm almost coming to the end of my seminar. Then there'll be cases of forced documentation and security which would not have been there in the first instance. You have your various cases where a loan has been taken against the same flat, multiple loans taken against the same flat by forging the documentation. The security, if you go, once the account becomes an NPA, the stocks would just not be there. So it's a case of siphoning of basically not fund but siphoning of the security. So these are something which are practical issues which one faces in everyday life, in our everyday recurring concurrent audit or the statutory bank branch audit. If anything is fraudulent, I think one needs to take a proper view and report it as fraud. Now, the future of our controls, I think if you clearly look at RBI notifications, there are the notifications also have a lot of speeches made by various senior functionaries of the bank, of the Reserve Bank. I think you have speeches by Dr. Shaktikanta Das, the latest one being on 11th March 2020, where he talked about the future of banking. So a lot of things which come out is the use of artificial intelligence, machine learning, blockchain, cloud computing, big data analytics. I think these would be technologies which would be used rampantly in the future. And the purpose is all to convert data into information, knowledge, and wisdom, to have foresights from hindsights and insights. Then you have another word which is recently introduced called a regulatory sandbox. Please refer to that. Very interesting to know. Then you have RBI talks of supervision in 4 parts. One is just the disclosure which is needed. The second is what they call is a light touch supervision. Then there's a tight regulation, and the finally is full-fledged supervision, which also could mean superseding the board or the management. Then you have mobile and web-based applications being used in a very large manner. This could again be subject to frauds. You have digital currencies equivalents. You have peer-to-peer lending, crowdfunding. You have robo advisors. You would be having e-aggregators. So the future of banking would basically, I think, be determined by technology. So a classic statement in banks is, banks may not be there, banking will be there, because now again with the current situations, post demonetization, the necessity for cash had decreased. We have moved to digitization in a big way, and now with work from home culture or remote access being there, I think the cyber space is what will be being used rampantly, and the cyber security, that's why assumes importance. So when we look at frauds, I think we need to look at it from the key risks: the risks of money laundering, the risks of credit defaults, the frauds in the credit space. Finally, operational frauds would be there, which would lead to a lot of these credit frauds or the money laundering frauds, which would help basically placement of funds, layering of funds, and then the final integration. So credit frauds, your money laundering frauds, your financial frauds, again financial frauds in the sense that it impacts money, and the second is that the books of accounts manipulations which would be done. Everything has the reputational risk, and to top it all, now you have the cyber fraud. So these are basic stuff which one needs to see. Now what one needs to ask is very pertinent, pointed questions in your representations. So questions like, does the bank have a fraud policy? Is the fraud policy available at the branch? Does the branch staff have access to the fraud policy? Now, if they have access to the fraud policy, have they read the fraud policy and have they understood the fraud policy? Have they signed off the fraud policy as an acknowledgement that they have understood it? Is there a specific do's and don'ts in form of any controls or any methods or any processes which the branch employees need to adopt? So whether that's done. Is there a procedure of identifying fraud risk scenarios? So basically having a fraud register. Once you have identified a fraud risk scenario, whether you have mapped your current controls, basically your automated and proactive controls. If your controls are manual or detective, then again that's a control issue. I would say the design is not proper or there are gaps in design. So again, that could be a reportable point. So one is your risks, your controls, and what are the gaps. Is a gap assessment being done? So if the gap is not zero, there is some gap which is clearly above your risk tolerance level, then what are the steps you are taking to eliminate those with the fraud risk owner, with the timelines, and whether monitoring of that is done, whether there is a fraud training, anti-fraud awareness, anti-fraud sensitization in place, whether there is a strong and robust anti-fraud culture, whether there is a firm tone at the top, whether that's a clear display of zero tolerance for fraud, and then what are you doing for cyber fraud? And again, do you have an employee fidelity policy? Do you have a cyber insurance taken? Is there a process for maybe when you are taking employees having background checks? When you are sacking somebody for fraud, are you giving him a termination letter that he has been sacked for frauds? Whether you have deterrent steps that will prevent an employee from conducting a fraud, whether exit interviews are taken, whether I think one very important manner and one of the major ways in which frauds have been discovered is through whistleblowers. So whether there are policies to protect the identity of the whistleblower, to encourage a system where somebody feels it free and feels open to basically disclose ethical violations or conflict of interest situations, whether there is a policy which talks on acceptance of gifts or which has a strong culture which forbids somebody from being corrupt or giving bribes or facilitation payments, whatever you call that. So the entire culture, the entire fraud governance framework is what matters and which auditors need to see. And the key tool what they have in hand is their reporting. So it could be either your main audit report, any violations in the standards of auditing could be reported. If he's not got all the information and explanations which to the best of his purpose and belief were necessary for the purpose of the audit could be reported. If there is any basic true and fair issue, I think you could straight qualify based on account manipulations. And if there are any other issues which are weaknesses in controls, in design, in implementation, there are gaps, I think you could easily find a mention and make a mention of it in the LFAR. Now, if any issue is not a branch issue, but it is a bank issue, you can just put it straight for the attention of the central statutory auditor. Now, if there is any doubt or any point of time, any uncertainty about how you report or whether this is a fraud or not, I think you can always consult the central statutory auditors. You can always consult the functionaries in the WRC for taking the right guidance. They can put you in through with the right experts, or there are always peer chartered accountants who would be willing to help. So when you are in situations of doubt, please take the guidance, please take the necessary support from all. I think be safe than sorry, and it's time that we keep our skepticism and I think our way which we think, I think the judiciousness which we need to display has to be done with a lot of conservatism and prudence. So with this, I come to the end of my inputs. I think it's very great that you gave me such a patient listening, and I look forward to answering any questions which are there.
Abhijit ji, thank you very much for such a marathon session. There are few questions which Mishra ji is putting up on the screen. If you can see them, can you see the questions now?
No, I'll just see. I'll just give me a minute. I'll just see that.
Yeah, Mishra will share a screen. So
Yeah.
on that screen, you can see the questions and then you can answer one by one.
Or there was somebody was in the previous sessions where I had somebody was reading the questions and I was yeah, but okay, these are the screens.
Right,
Okay,
sir.
I'll go. Yeah.
Yeah,
I can
these are
read the
the-
questions
yeah.
for you if you.
Fine. There are some 8 questions. I'll go through each one of them. How to detect bank frauds? That is, what are the practical scenarios with practical examples where a bank fraud can take place? I think this is not a question. This was the entire session itself, because frauds can happen everywhere. So if you look at the fraud circle theory, wherever there is money, there would be frauds. But the most common which we said is asset misappropriation, financial manipulation of accounts, but we discussed various scenarios of types of frauds. All of these are fraud. I believe this question would have been asked earlier. One thing is I'm also sharing my presentation with the institute immediately, so that could be circulated to whoever would need it, or that I believe you could display it on the website, but that has all the cases where frauds can happen in banks. So wherever there is a control weakness, there is a possibility that a fraud can happen. So and whenever there is money involved, so it's ideally that you can evergreen or window dress anything. So ideally, funds which have been taken in the last minute, what banks do, ideally they take up deposits from customers to shore up their balance sheet size, and in the next week that money is withdrawn and taken back. Or wherever there are unutilized, undrawn balances in CC accounts, they are basically utilized, and again they are withdrawn somewhere else, and again maybe after the year end they are again bought back, so the balance restores to normal. So it's just a case of inflating or padding up your account. So that's also evergreening, which could also be considered as fraud. So anything and everything is a fraud. The point is, please understand what is fraud. So the definition of fraud, as given, as I said at the start, I spent some time on it on section as per section 447(1) of the Companies Act, as per section 17 of the Contract Act, and what are your responsibilities as per section 240 of the standard SA 240, and maybe the various circulars, the 6 circulars, important, the most important being the Master Circular on Frauds, the Master Circular on Willful Defaulters, and the Cyber Security Framework in Banks. Now, do you think that frauds like PNB could have been avoided by effective system audits? Any fraud can be avoided by proactive controls, provided one would have made an fraud scenario and one would have found out the gap in control. Primarily, the PNB fraud happened because of the fact that nobody identified this as a risk. So this was a clear case of a risk identification failure. And ideally, even if it is not identified, maybe it was identified because of institution of certain controls, which like job rotations and mandatory leaves. So these controls may not directly prevent a fraud, but they have a collaborative effect of finding out the fraud in certain manner. So finally, frauds are found out in certain manner. The biggest way that which frauds are found out are by internal tips. So whistleblowers are one of the biggest ways in which frauds are found out. Then you have your internal audits which find out fraud. So there are various control mechanisms which could find out fraud. So any fraud which down the line in history which has happened could have been avoided, could have been reduced, or could have been found out early by better controls. In case of educational loans, if the bank manager extends the terms of repayment themselves every time, whether it's called fraud. Now, fraud is technically, it's something done with intent, with a criminal intent to basically cause any wrongful gain. I believe here there may not be a wrongful gain to somebody, but yes, it's against the procedure and the policy of the bank. So unless it's not ratified, I think this would be an error. I would say this is a gross error, but I may not possibly qualify that as a fraud. During audit and how to identify such 80% people who have integrity and commit fraud, is there which questionnaire which can be used? I think this is a very general theory. I think this is what the 80% population makes fraud assessment and the fraud management exercise much more challenging and much more difficult. I really don't think that you can straitjacket and bucket everybody in a 80-10-10 rule. This is just to understand and give a broad framework that anybody could commit a fraud. This also reinforces the fraud circle theory that anywhere where there is money, there will be fraud. And if you have basically coupled with your opportunity, pressure, rationalization, and capability, I think frauds will happen. So one of the best ways in which a fraud control exercise is done is find out all cases where there could be opportunities, meaning weak or non-existent controls, and they try to plug it, or where there are pressure situations or conflict of interest situations, they try to reduce it. So a lot of fraud control units are called fraud containment units. They are not called fraud elimination units because practically it's not possible to eliminate frauds or make it zero. You can at the most contain it to a reasonable level or the level below your tolerance capacity. So I think this 80% is ideally a myth, not a, but it's good to understand this as know this as a theory. Risk management review and risk policy review is not possible at branch. What is the remedy for it? Ideally, why should it not be possible at a branch? Because risk is prevailing at the branch itself. So there should be processes and controls, and that too in a formal, structured manner to prevent risks at a branch. If you look at evolved banks, or if you look at evolved branches, they have policies and procedures in place. So one is, if it's not possible, it's a control weakness. I think you are fair, and that's to report it factually in your long form audit report. That I believe the only remedy is that you institute controls, and for you, the only remedy for you is to strongly recommend that it needs to be done. What if one avails higher DP by giving higher figures in the stock statement? Again, if you look at the master circular for cooperative banks, this is a fraud which is said as committed by unscrupulous borrowers. The master circular for commercial bank doesn't talk of it, but yes, if you look at the general definition of frauds, this comes under the category of frauds. Now, RBI has not taken a stand to call this as a fraud yet. Our Institute of Chartered Accountants hasn't yet still taken a firm stand on that. I think the guidance note talks of this, that if there is any such deviation and this deviation is material, and this is also aided by other factors, that the borrower is not submitting statements on time, he's fundamentally weak, and there is a possibility that the loss will be caused to the bank, and there is also any other external auditor like a stock auditor who has reported it. So it's not easy for the statutory branch auditor to ignore this, and in such cases, on a case-to-case basis, I think he should take a call whether to report it as a fraud or not. Is any specific KYC policy applicable to Credit Cooperative Society Bank? The KYC policy is uniform across the globe, across the country. RBI is the regulator. RBI prescribes KYC is a proof of address, proof of identity. But beyond just taking a proof of address, proof of identity, it means understanding the business of the customer, to know what is the source of funds, so that the transaction he does with the bank are in sync with his business. It's basically understanding the business of the customer more than just having a tick box proof of address, proof of identity. Now, what kinds of documentation, specific documentation should be maintained by the auditors to confirm that the fraud assessment has been done as per SA 240? Now, SA 240 is a broad framework. Now, all essays say that the documentation which you should do is something which they've used the terminology or the taxonomy of what they call an experienced auditor. So an experienced auditor is somebody who's basically not done the audit, specific audit, but by looking at the work papers, he'll able to form a conclusion whether the audit has been done in a proper, diligent manner with due care and interest. So that's a very broad framework which has been set to define what could be the adequacy of documentation. Again, this is a situational and a case-to-case basis, but yes, one is what are the attempts that you have done to find out what is the risk assessment process. Is there, we discussed a lot of scenarios of the fraud structure, the fraud policy, the fraud governance framework, the fraud culture, the fraud risk scenario identification, the control mapping. I think one needs to ask these questions, one needs to get information, one needs to document all this. Based on that, one needs to draw conclusions. How he has arrived at those conclusions all need to be documented. So finally, how he comes to the opinion that the bank has been managed properly or fairly, or the actions of it, I think this is where that will come into being. Sir, for UCB, is there any specific circular about fraud? For UCBs, there is a master circular on frauds. This master circular is dated 1st July 2015. For scheduled commercial banks, there was also a circular dated 1st July 2015. The points which I discussed about frauds being committed by unscrupulous borrowers were appearing in both those circulars, but this was overridden by a circular on July 1st, 2016. that circular for scheduled commercial banks does not have this clauses on frauds by unscrupulous borrowers. So I believe RBI doesn't intend that inflated draw power or one which is done by negligence of employees or by the management as specific cases of fraud specifically by it, though they would be termed as frauds by other general definitions or clauses. But yes, to the limited extent, yes, there is a separate circular for urban cooperative bank. In fact, for urban cooperative banks, all master circulars are different. For scheduled commercial banks, the master circulars are different. So apart from this, are there any other questions, or these were the only 10 questions? I can say only,
No, sir, these are only, I think these are the ones.
yeah.
And if there would be any more, we could get them, we could connect them to you, and probably you, with their email IDs, we can answer them back.
Sure. So I will share the presentation with the institute immediately. Anything else?
Sure, sir.
Maybe any
We'll
personal
forward it.
questions or somebody who's raising a show of hands, I'll take them off if we have that.
Sure. So Abhijit ji,
Right.
thank you very much for conducting such a marathon session. And let me now request Arpit to carry out a formal vote of thanks. But before that, let me also thank Lalit Bajaj, Chairman WRC, for this idea. Manish ji for helping us in this, and all the WRC staff, starting from Ravi Arora, Mishra, Subhash, Vaibhav, Seema, for helping us in conducting these programs. And even today's coordinator.
I hope it was a useful experience for the participants.
We'll get the feedback. Arpit, over to you for a formal vote of thanks, Arpit.
Right. Thank you, Murtuza. And indeed, fraud is a subjective word. As you started, there is no definition of fraud, and it is as subjective as your health in these times. So make sure that you are on the correct side of the term, and use these powers as an auditor to identify, to report, and to highlight the frauds very effectively without causing any collateral damage as such. But more importantly, it should be made aware of, and it should be documented well enough so that during these times when there are a lot of frauds that are being examined and there are a lot of actions happening, probably we need to be very extra cautious, and anything should not be missed under test check basis. Any material amount, any material observation if gets missed, it could be a really difficult one. And very well highlighted by Abhijit sir, about the it could be a risk for us as well. So I thank you once again, Abhijit sir, for a very well comprehended and a very comprehensive presentation on this frauds.
Thank you.
We'll
The
also
pleasure
have
is mine.
friends who are attending. We'll also have one another session. Yes, sir. We also have one more session lined up wherein we'll be identifying how to, from our financial statements, we can identify frauds and all. That is also due and it is lined up. I thank the WRC chairman, C. Lalit Bajaj, all the office bearers, Secretary Murtuza, who's been here throughout and has taken really a lot of efforts in organizing these. This entire webinar has been organized, since this is technology and we are all getting used to it. So thanks to Ravi Arora, the DCO who's here, and Mishra ji, Subhash, Vaibhav, who have been really behind the scenes and to make sure this event has been successful. I thanks Kamlesh Bhai also, who's the coordinator for this session, has taken out time to and he's a very keen FAFD person, so you can reach out to him also for any further assistance that you need. And very well pointed out that during these bank audits, if you really have anything, WRC is committed to assist and help all its members. So we could connect you with the relevant expert or your central statutory orders, but do make sure that you are taking good care of these frauds or apparent frauds that you feel. Read all the things that have been highlighted by Vijit sir, the circulars, master circulars, and the other definitions. And I'm sure this bank audit season we will be able to do a very good job. Also try and grab, if there are any frauds reported in your branches, try and grab a copy of the forensic report and see the balance sheet and see the analysis for yourself, and that would help you academically as well. On these notes, we'd like to sign off. Thank you all. We have a next session coming up, next webinar, that is at 4 o'clock, So, we have to prepare for that. So thank you, everyone. Thank you for attending. Thank you for time, and look to connect with you all again. Thank you. Have a great day. Great learning. Stay safe.
Thank you.
Thank you, Abhijit sir, and thank you all the RCMs and Murtuza sir. Abhijit sir,
Thank
there
you.
was a record participants, more than 600 today.
Oh, thanks. Great.